Happy Fed Day, folks. For all of you normal people out there, you hear Fed rate cut on the news or however you get your information, you think, yeah, whatever, and you move on with the day. I want to change that in the next 5 minutes and get you guys excited about interest rates. So in this video, I'm going to tell you what a Federal Reserve rate cut is, and then 3 ideas or action items that you can take after a rate cut that might make sense for you. So here we go. Number 1, lower borrowing costs. Okay, so the borrowing costs are going to be lower. A rate cut typically leads to lower interest rates on loans, your mortgage, auto loans, credit cards. For families looking to borrow money, this means they may secure a loan at lower rates, right? Making large purchases more affordable, okay? Number 2, mortgage rates and refinancing. Heard a lot about this. A rate cut often reduces mortgage rates, which can lead to lower monthly payments for new home buyers. And for existing home buyers, it might create an opportunity to refinance at lower interest rates, okay? Saving money on their mortgage payments over time. Obviously, there are closing costs and other things involved, and that's what you would have to weigh out. Number 3, how does this affect us? Savings accounts and investment returns can change. While a rate cut can benefit borrowers, it also typically means lower return on your savings account or fixed income investments. And what are those? Those are CDs at the bank, maybe high yield savings accounts. For families that rely on interest from their savings, this might reduce their income from these sources, okay? Obviously, if you were getting 4% before and now you're only getting 3%, that reduces how much interest you're getting and how much income you're getting from those investments, right? Number 4, increased spending and economic growth. When the Fed lowers interest rates, it generally encourages consumers to spend and invest in businesses, which obviously can stimulate economic growth. So for families, this might translate into more job opportunities, wage increases if the economy is stronger, okay? Number 5, inflation considerations. So this might be on the other side of it. On the negative side, in some cases, rate cuts can contribute to inflation if the economy actually overheats, okay? So for families, again, this could lead to higher prices for goods and services, offsetting some of the benefits of the lower borrowing costs. So we want to get on the right side of that. Overall, a Fed rate cut, why are they doing it? It's a tool to stimulate the economy and economic activity by making borrowing cheaper, but it can have mixed effects depending on whether someone is more of a borrower or if they are a saver, okay? So what do you do about this? Following a Federal Reserve rate cut, a prudent person might consider taking, I'll give you guys 3 action items. Number 1 is, and first, review and refinance your debt. If you have a mortgage, student loans, or other types of loans with adjustable rates especially, this is a good time to explore refinancing options, okay? I mentioned that with the mortgage rates at the beginning. A rate cut can lead you to lower interest rates on existing debt, potentially saving you significant money on interest payments over time. Second, reassess your investment strategy. Lower interest rates can affect investment returns, particularly, again, for fixed income investments like your bonds or savings accounts. We would consider reassessing your portfolio or your mix of investments to ensure it's aligned with your financial goals. You may want to look at higher yield investment options or rebalance or invest more into equities or stocks if appropriate for your risk tolerance and time horizon, okay? Your advisor should be keeping an eye on this for you and taking appropriate action based on your individual goals. If you have questions about that, reach out to your advisor. Third, and I'll tell you this, boost savings toward your goals. So what do I mean by that? With potentially lower returns on savings accounts and CDs, it's really important to ensure you're still on track to meet your financial goals. I would consider automating your savings toward long-term goals such as retirement or emergency funds, and look for accounts that offer competitive rates to maximize your returns in a low rate environment, okay? We're not actually going into a really low rate environment yet, but this is the first move toward that, and we may want to get ahead of it. So we loved after-tax investments on a systematic basis before rate cuts. Now we love them even more. So I would diversify future taxes. We talk about this a lot on our podcast and other videos. If you can diversify your future taxes, you can have liquidity now and get the most from your money by saving into an after-tax account, okay? If you're sitting on too much money at the bank, in a CD, a money market, savings, or checking account, and you think it's really doing nothing, I hear that a lot, it is time right now to look at some other options, okay? Reach out to us with any questions, and for now, make it a great Fed day, folks.